Hey guys, welcome back to the channel. Today I want to talk about getting 38% dividend yield from silver. You heard that right. 38%. Okay, I misspoke. 37.49% dividend yield from silver. Is there a catch? Probably. And I think, this is a good lesson to have. To really know what you're investing in, right? Now, I'll preface this and say I've done about an hour worth of research on this, okay? And just from that hour, I can tell you right now that this is extremely difficult to understand, okay? And I'm not going to sit here and tell you that I understand it 100% because I don't. But surface level, we're going to go over it, we're going to look at it, see kind of how it operates, and check it out. So if you're new here, please like, share, subscribe, do all that good stuff. Check the pinned comment down below. Support the channel in any way you can. I would appreciate it. You guys are awesome. And let's just get into it. So what are we looking at today? We are looking at the Credit Suisse SLVO, and that's the X-Links Silver Shares Covered Call ETN. So right off the bat, we're thinking, okay, this is a silver ETF, silver, the metal silver, and they sell covered calls on it, right? Well, it's not an ETF, it's an ETN. Now it's a little bit different. It's an exchange traded note. Totally different from an exchange traded fund. And we'll just go over it. We'll go through it as we go. Right now it's trading at around $6.21. We'll look right here. Current yield annualized is 37.49%. Yeah. So, right off the bat, whoa, $6 and I'm going to get 37.5% dividend yield. Yes and no. It's not actually a dividend yield. It's a coupon payment, because exactly what an ETN is a note. So it's extremely more similar to a bond than it is a fund. So an exchange traded note is essentially you giving money to Credit Suisse, and they do their own investments, and if they make some money, they'll kick it off to you. There is nothing in the ETN. There's no ownership of any shares whatsoever. Okay? We'll just keep going through here. So ETN overview. The Credit Suisse X-Link Silver Shares Covered Call ETN are right here. Senior unsecured debt securities issued by Credit Suisse AG. Okay? So unsecured, meaning that there's nothing backing the money that you're putting into it. Okay. There is a index that follows, NASDAQ Flows 106 index, and I haven't really been able to find too much on it. So here's a key note to there, because usually bonds, when we think a bond type fund or a note, that we would get fixed payments, right? Like a income, right? Bonds pay you fixed interest. Well, this one is the ETNs may, keyword may, pay a monthly variable cash coupon based on the, I don't even know how to say that word, notional option premiums received from selling call options. The ETNs are listed on the NASDAQ stock market under the ticker symbol SLVO. So I looked up the word notional, and it's a notional amount on a financial instrument is the nominal or face amount that is used to calculate payments made on that instrument. Now, what's interesting, though, is the actual definition of that word is theoretical, speculative, existing in the mind only, imaginary, given to foolish or fanciful moods or ideas. So, just some interesting language being used here. Let's see, what else? The index seeks to implement a covered call, in quotes there, investment strategy by maintaining a notional long position in shares of the Silver Trust ETF while notionally selling call options on that position on a monthly basis that are approximately 6% out of the money. The notional net premiums received for selling the calls are paid out at the end of each monthly period. So, notional, that's an interesting word that they're using there. So, one thing, where was it? Let's go to the fact sheet, or actually it's essentially the prospectus. In bonds or notes, they're called pricing supplements. And I want you to notice something here. You know, most prospectuses for ETFs are pretty darn long, right? And you can pretty much not read them for the most part. But look at this thing. 190 pages of a pricing supplement for this thing. I don't mean to laugh because I know there's a lot of people out there that are invested in this, and you're investing in it probably just due to the price and the income, right? But here's the problem I have with it, okay? This is horrible. Absolutely, to me, this is absolutely horrible for a retiree to get into. And there's a couple of reasons why. One, right here, the ETNs do not guarantee any return of your investment. If the index declines, investors should be willing to lose up to 100% of their investment. Any payment on the ETNs is subject to our ability to pay our obligations as they become due. So this isn't about silver. This isn't about, selling covered calls. This is about the health of Credit Suisse, because you are buying essentially a bond or a note from them, and they're using that money to do something else. So the ETNs will pay a variable monthly coupon amount based on the notional options premiums. I think we already read all that. But another sentence here is important. Since the monthly coupon amount is uncertain and could be zero, investors should not expect to receive regular periodic interest payments. So even though it's a covered call fund, it says it pays 37% annual yield, you should not expect to receive periodic interest payments. And right here, the ETNs, the last one, the ETNs are senior unsecured obligations of Credit Suisse acting through its Nassau branch and maturing April 21st, 2033, unless the maturity is extended or option. So this has an expiration date. Another bad thing for retirees, right? For one, you're not guaranteed any interest payment whatsoever. It expires and could essentially go to zero. So the domination, when it started out as a basically $20 a share. And where is it now? What did we say? It's at $6.27. So it's been around, I think, since 2013. And it started out at 20 and it's now down to $6.27. Now, if you look at a 1-year chart here, you look at it and go, that's not too bad, right? It's up 3.8% for the year. And it's $6, $6.27. Pays, you're getting different numbers from different places, but 35% yield. But if you look at the max chart, that is one ugly chart. Started from $20 and you've just lost money all from 2013 on. Now you're saying, well, you could just buy it now. It's cheap, right? Yeah, but like it said, there's nothing backing this ETN as I read it, right? What's backing it as far as physical investment, right? There's no silver that you're going to get if this thing goes kaput. You're backed by Credit Suisse. And when we look by Credit Suisse, they're having a bunch of issues right now. Now, if you look through some of the articles, this is the company that you're giving money to. So we'll look at this. This was dated April 29th. Credit Suisse Group AG Risk Committee head Andreas Gottschling is stepping down from his role after prominent investors indicated they'll vote to oust him following the $5.5 billion hit from the meltdown of Archegos Capital Management. Credit Suisse emerged as the big loser in global investment banks' race to exit trading positions as Archegos collapsed, forcing it to raise about $2 billion of fresh funds from investors to shore up its balance sheet. The debacle wiped out a year of profit and left investors nursing heavy losses and questioning the bank's controls after a string of hits and write-downs. So, what is an ETN? It's essentially a unsecured bond that's issued by Credit Suisse. And we can see the type of issues that they're having at the moment. These are the people that are backing your investment in the ETN. So, again, this has kind of been a bash on SLVO. I just wanted to put this out there so that people will, dig a little deeper into what they're looking at. Don't just look at the yield, right? Because if you look at SLV, because there was something, I had too much stuff up here that I wanted to go over, and it's a little, I don't want to make this too long, but here's one thing. This is one thing I wanted to say was why it's bad for retirees. Hey, if you look at the coupons, yes, it's paid out a lot of dividends over time. 2013, it paid out $1.75 in that year, then $1.85, then $1.42, then $1.48. But in 2017, it went down to 71 cents. That's over a 50%, reduction in your income. If you were relying on this and you got a 50% cut, man. And then 2018, it went down again to 42 cents, almost another 50% cut to your income. So even though it's recovered here in 2020, there is no guarantee of income. So what I want to do is compare this to the actual silver trust that it notionally sells covered calls on, and see how it's fared. And we got it over here on the ETF channel here, and we'll just chart 10,000 invested. It'll do the max, I think, from 2013. So if we look here, the SLV, which is the iShares Silver Trust, total return over, about 8 years, you got 8% total return. Not great. Your money was preserved. You lost out on inflation. But SLVO, you lost 8.47%. This is with dividends reinvested. Okay. Now, if you I'm hoping that ETF channel has fixed this. I think they have, because I've noticed some differences. The without dividends reinvested used to be way off. But we look at SLV. SLV does not pay a dividend, but SLVO does. So that might be the allure of it. But even with you taking the dividends from SLVO, your total return would be negative 16.73%. So after 8 years, your $10,000 investment will be $8,328. So didn't preserve your investment. Yes, it got you some dividends, but very unstable, very unreliable, and it has an expiration date. So you might put a bunch of money into it right now, and if Credit Suisse, with their issues that they're having, if they somehow default, you're out. There's nothing there because it's unsecured. Unsecured note is what this is. So I hope that helps. I'm not saying I'm 100% right on this. but from what I understand, the surface level for what I'm reading, that's how I understand it. I hope this was helpful. You guys, leave me a comment down below, like, share, subscribe, do all that good stuff. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.